Ladies and gentlemen, welcome back to the channel. Holy guacamole. Tesla just cut the price of the Model 3 and the Model Y, basically all of the different variants. Now, I think there's a bigger reason why this is actually happening. This does not make a lot of logical sense to me, that Tesla is just doing this for no reason. So we're going to get into why I think Tesla is doing this, how the stock is reacting upon this news. This news just came out about 30 minutes ago, so give it some time for digestion here. But I want to get into what could happen to Tesla stock if they just cut prices, if there's nothing else coming, which, long story short, I don't think that is the case. We're also going to get into a major market warning that Marko Kolanovic just gave. He thinks a 20% or more market crash is coming, and Josh from CNBC, I know you guys have seen this individual before. I really like what he has to say. He gave you a similar warning about the jobs report, which comes out tomorrow. He says the next 1,000 points up or down is contingent on the jobs report. If you guys don't know, that's like 3% roughly, a little bit more than 3% on the Dow, which could be more than that on the NASDAQ or the S&P. So we got a lot to cover in a very short amount of time. We're going to keep this one short, sweet, straight to the point. Hit the like button and subscribe to the channel if you are tuning into this video, if you are a Tesla stock investor, and if you are confused on why Tesla is cutting prices. So let's get into that first things first. Tesla has now slashed the pricing of the Model 3 and the Model Y. So the Model 3 rear-wheel drive is down $1,250 from $40,240, now down to $38,990. So Tesla cut the price on even the rear-wheel drive Model 3. The Model 3 long range now goes for $45,990. This is a reduction of $1,250. It was $47,240. The Model 3 Performance did get cut by $2,250 from $53,240, now at $50,990. And the Model Y long range got cut $2,000 from $50,490. I guess that's the more appropriate way to say that. Now sitting at $48,490. The Model Y Performance was also cut $2,000 from $54,490 down to $52,490. These are not small price cuts. These are not a couple $100. These are a couple $1,000 of price cuts. And it's not just on the long range variants, the performance variants. It's basically on everything. So why? Besides the new Model Y rear wheel drive, besides that one, the newest one that we just got. Now, why is this? Well, couple different things go into my mind or my thought process around this. One reason that could make sense is what Gary Black said today. Now, take this with a grain of salt. We don't know. This is one opinion from Gary Black. This is one tweet, if you will, from Gary Black. He says, I talked to my Tesla sales contacts here in Chicago this morning. He told me that Model Y rear-wheel drive orders are huge and most buyers don't care about 0 to 60 taking 6.6 seconds. The big questions are about range, how long it takes to charge, cost of charging, and maintenance costs. He told me he gets almost no questions about autonomy. Now, if you guys missed it, I'll clarify. If the orders for the rear-wheel drive are huge, well, maybe that makes a little bit of sense. For Tesla doesn't want this new lowest price Model Y version to become even more popular than the existing versions. After Tesla just got rid of their standard range, now down to the rear-wheel drive that is thousands of dollars less, Tesla cutting prices could make sense, at least for the Model Y, to $32,890 with the tax credit. That's crazy for the Model Y. But long story short, Tesla might just see this as, hey, instead of making the lower price Model Y really the dominant one that everyone is buying, maybe we just cut prices a little bit on the higher end models, and people are like, hey, it's only a couple $1,000s difference, and buy themselves a higher end model. That is one potential explanation. The second thing that I think is a little bit more fascinating is maybe this is the final round of price cuts right before the Cybertruck delivery event. And let me explain my logic behind this a little bit, because that might not make sense. But if you're Tesla and you wanted to cut prices, you know that's a negative catalyst for the stock. You know that's just not something investors want to see. But if you give investors a bone here, and you also announce the delivery event for the Cybertruck, that could offset some of the damage, if you will, to Tesla's stock upon cutting prices by this much. A small price cut, I wouldn't be saying this, but there is no other reason besides these two things and this one other reason why Tesla would be doing this. Maybe the Cybertruck is coming here soon. Number 3, and I think this one's straightforward, and I think it's the least likely, but I think they all kind of are playing a role into each other in a weird way, is just the affordability has gotten so ridiculously low for basically any high dollar item you need to finance, whether it's a car, whether it's a house, whether it is anything else that costs a lot of money. Rates, especially what you've seen recently with the longer end of the curve with the 10, 20, 30-year bonds, is really making everything unaffordable. So maybe that would make some sense as well, kind of in coupling with these other reasons that I have put forth, but I don't think that's just enough of a reason to see $2,000 price cuts, $1,300 price cuts for basically all of their lowest price models. This would make, again, more sense on the Model S or the Model X because that's a higher dollar, item, right? That's a higher price tag. But I think you have to think something else is coming. Now, I don't know. News of the Cybertruck is not out yet. That could be coming. And I could just be a little bit too early on this video. That's a possibility, but I think it's has something to do with one or all of those 3 things that I just mentioned. Now, what's actually interesting about this, if you're looking at overnight trading, Tesla's stock is only down 0.33%. You're not really getting this cratering of Tesla stock. Maybe that's because it is overnight trading, and maybe that's because people haven't found out about this price cut yet. What price cuts really do is it forces you to discount the valuation of Tesla. For every Tesla vehicle Tesla now sells after today, they're going to bring in less money. This is different than like writing off inventory or other accounting strategies you can implement. This is why everyone hates price cuts, because one, it's easy to cut prices, it's harder to raise prices in the future. Prices usually don't go up for innovation, they tend to go down, so you're speeding along that downside kind of cost pressure. But it also just fundamentally forces you to discount the valuation of Tesla. So I think this does or will have some greater effect than this down move you're seeing here in after hours, unless it's matched again with like a Cybertruck delivery event. Then I would expect you could actually see a net positive to Tesla stock over the next coming days, but that's really hard to tell when exactly the Cybertruck is going to be announced. Now, in terms of Tesla stock, unfortunately, this comes at kind of the worst time possible because you are right at the moment in which you're about to break out above your longer-term downtrending line. That line is right at about 265. If you get above that, then you could see a bigger move to the upside. Again, if the Cybertruck does get announced, it's possible we could still rally from here. Anything's still on the table here. But if we don't get news of the Cybertruck coming in the next 12 hours or so, 24 hours or so, well, Tesla's stock probably going to fall. Now, I would imagine you're at least shaving off $10 per share the next trading session, maybe $5 per share. really depends. If the labor report comes out tomorrow and it's really bad, that is not going to be great for Tesla. It's going to be like adding bad news via these price cuts and adding bad news because likely bonds will rocket higher at that point. So if things do get bad, if Marko Kolanovic is correct, then obviously the downside just got opened up a little bit more for Tesla stock following these price cuts. That brings us to our next segment. JP Morgan's Marko Kolanovic braces for a 20% market plunge, delivers a recession warning. According to the Institutional Investor Hall of Famer, high interest rates are creating a breaking point for stocks, and choosing cash at a 5.5% return in money markets and short-term treasuries is a key protection strategy right now. Quote, "I'm not sure how we're going to avoid a recession if we stay at this level of interest rates," the firm's chief market strategist and global research co-head told CNBC's Fast Money on Thursday. Kolanovic believes the weakness isn't a strong sign a monster move lower is already here. He indicates a near-term bounce is still possible because a lot hinges on economic reports over the next few months. "We're not necessarily calling for an imminent sharp pullback," he said. "Could there be 5, 6, 7% upside in equities? Of course, but there's downside. It could be 20% downside." And that's exactly what he's saying here. He's saying basically the most you're going to get out of this rally is 7, 8%. That would take you basically back to all-time highs. That's where valuation just becomes astronomically high, even higher than the astronomically high valuations we have for stocks right now, especially your tech stocks. And then if you add there the equity risk premium, whereas meaning that if you're upside 7 or 8%, if you can get, call it 5% in a bond, your true upside is 3.5%, and at that point, or 2 to 3% really, I should say. And what are the odds that you go up 7 or 8%? They're probably pretty dang low. So you're really only potentially making 2 to 3% more than you would investing in a treasury if the lowest possible kind of probability happens in the markets, and that would be the markets just rally and hit new all-time highs because the economic data worsens. That doesn't make a whole lot of sense. Whereas he's saying the potential downside could be 20% or more, and I do tend to agree exactly with what he's saying. Long story short, the risk reward in this market does not look good, so any data is going to be very important. Now, we're going to be getting the jobs report here in just a couple of hours, and what you're expecting is 170,000 job ads and 3.7% unemployment. If you get 3.9% unemployment, that will be good. Anything above 4%, I think the markets have a little bit of a panic attack there. And non-farm payrolls, anything around 100,000 is going to be good news. Anything lower than 100,000 might be seen as bad news. Now, if we get a good report, that's also seen as bad news as well, because that likely means the bond market continues to be unhinged and could go quite a bit higher from here as far as the yields. Take a listen to what Josh on CNBC just said. This is a guy that you really should listen to. Like, I know a lot of people get a lot of credit and credibility when they really shouldn't, but I really do respect this guy, and he seems to make the most logical calls. Like, it's hard to find someone that is logical out there, and he's by far the most logical individual that I've ever heard speak about the markets, to be quite honest.
Committee here to get ahead of all of that. Joining me for the hour, everyone at Post 9, Josh Brown, Kerry Firestone, Jim Leventhal. Take you 12 noon in the East. We'll show you what the markets are doing today. Red across the board, as you see. Red 2 from yields, which we continue to watch closely. 472 is the note on the 10-year. So you, Josh, are real dialed in on tomorrow and the jobs report and what might happen to this market depending on what that print is.
Yeah, I'm usually the guy that comes on and says, ignore the economic data, it's already priced in. I think in this case, if we get a hot jobs report that contradicts the little bit of relief that we got from ADP in the middle of this week, I think that you're going to make new year lows in all the major indices. I really don't think there's any way around it. I really think it's if this, then that, and it's as simple as that. I wish it weren't so. I wish people weren't reacting that furiously to a monthly look at whether or not we add 80 or 90,000 jobs in an economy where 150 million people are working. But absolutely, the markets are going to be quick on the trigger. A lot of this stuff is algorithmic anyway. Doesn't even require the sentience of a human being until later on. And I think that probably dictates the next 1,000 points in the Dow. So, and what it does beyond there, I don't know. The good news is economists are looking for about 170,000 jobs. If, in fact, we come anywhere near that number, that would be below the 187 that we added in August. And I think it's doable. And I think in large part we might be helped out by the auto strikes. This might not show up in this month. Maybe that's in next month. Revisions downward would be helpful as well. The Fed, I think, is miscalculating by continuing to pound on this higher for longer, higher for longer, higher for longer. What they've basically set up is a scenario where every uptick in the 10-year Treasury means like another $1 trillion coming out of the stock market. It's really stupid messaging. I think they could calm it down a little bit. They have largely gotten their way all over the economy, and so if we get this cooled off jobs report, I think it will really help sentiment. And it's possible stocks might have seen the lows for the year if that's what we get. Keep in mind, we are very washed out. I talk about internals all the time. I want to relay to you that the RSI on the index itself, on the S&P 500, the RSI is now 32. 30 is the low for the year, which happened last week. We are now more washed out, though, last week and this week than we were during the SVB crisis when the RSI and the SPX got to about as low as 33. Are we in worse condition economically now than we were when we thought there was going to be a mass bank failure? It seems so overdone. So the fuel is there for a bounce if we get what I hope we get.
So yeah, I think it's safe to say tomorrow is important. This news with Tesla, if you are a Tesla stock investor, is the most important. I couldn't tell you if we're going to get an announcement on the Cybertruck or not definitively. It sounds like there's something else coming. It sounds like this is just a very strange price cut. I doubt there is that much of a lack of demand right now that they had to massively cut prices to this degree. That just doesn't make sense to me. Let me know what you think about this latest move from Tesla down below in the comment section, guys. That's going to do it for this one. Hit the like button and subscribe to the channel if you guys want to stay up to date with everything going on, all of the breaking news each and every single day, what's going on in the markets, with bonds, with oil, with the dollar, everything that affects your portfolio, that affects Tesla stock, that a lot of people just don't talk about. And I think it's really a tragedy in this community because you guys need to know the ins and outs of this market if you want to be a profitable and wiser trader for an extended period of time. So that's going to do it. If you guys want to come join the trading community, we will be trading this heavily coming tomorrow. Link down below in the description of this video. You guys enjoy the rest of your day, and I will see you in the next one.